Hello, my name's Gene Tunney. I'd like to take you through some of the recent economic data that's come out, and I'd like to begin with the US jobs data, which was released in the US on Friday and which we learned about it in Australia on Saturday. And that showed growth in employment in May, from April to May, of 2.5 million people, and that was interpreted very positively by the President of the US, Donald Trump, and by the financial markets. So let's have a look at the figures, and we see that there is that pickup in May of employment in the US of 2.5 million, so up to around 132.5 million. Now that's still well down on the 152.5 million figure recorded in February, so pre-corona crisis. So still a long way to go back to where we were before. The unemployment rate in the US, it was reported it fell from 14.7% in April to 13.3% in May. Now, that's still a very high unemployment rate, and indeed it is higher than the peak unemployment rate in previous downturns. So still the situation in the US jobs market is very bad. Particularly for African American people, we see that the unemployment rate for Black Americans didn't fall in May. In fact, it slightly increased. It went up from 16.7% in April to 16.8%. So we haven't seen the decline in the Black American unemployment rate that we saw for the overall unemployment rate. Overall, the markets interpreted the jobs data very positively, and there was an increase in the stock market and the value of the stock market. So the stock market was up 2.62% on Friday. Australia's stock market also had a good week last week. So we saw it was up over 4%, and that was despite the national accounts data for March quarter, so for the first quarter of the year. That was released by the ABS on Wednesday, and that essentially confirmed more or less that Australia is in a recession according to that definition of 2 consecutive negative quarters of GDP growth. We had GDP growth of negative 0.3% in the March quarter, and we know that GDP growth is expected to be negative again in the June quarter, and it's expected to be, say, 7% or 8% negative. So it'll be a fall in GDP of 7 or 8% according to some forecasts. So Australia is definitely in a recession. We probably didn't need the national accounts to tell us that, but they did almost confirm that. We only had the estimate for March quarter, but we know that June quarter will be negative, and we expect that there will be a big decline in June quarter, as there will be in the June quarter in other countries. Last week there was a new nowcast estimate of GDP from the Federal Reserve Bank of St. Louis, and that shows that's an annualised rate there of around negative 35% in the second quarter, in June quarter, which translates to around a 10% quarterly drop in GDP. So they're experiencing a large drop in output, as we are. Theirs looks like it'll be much greater than ours at this stage. And of course, we know that drop in output has meant big declines in employment, high unemployment. In Australia, one of the points I made in some recent interviews on the recession is that it's been reported that there are around 1.6 million Australians on JobSeeker, and we also know that over 3 million Australians are having their wages subsidised under the JobKeeper program. So, yeah, really dire situation. Okay. Some of the other interesting news from last week, it was released on the Friday. There were some projections that came out from the Parliamentary Budget Office, the PBO, and the PBO has released its medium-term fiscal projections, so projections of deficits and debt out to the end of the decade. And as you would expect, given the corona crisis, given all of the stimulus and emergency spending, given the declines in revenue we're expecting, Australia is going to accumulate a great deal more debt. And according to the PBO projections, which I've brought up onto the screen, it will be about, on their estimates, an additional $620 billion of debt over the rest of the decade. And so that's as a result of lower revenues, and the PBO have revenues being lower by up to, that's around 90 billion. So that looks like that this financial year. And then even at the end of the decade, revenues are still going to be a few tens of billions of dollars lower than otherwise, and that's because the low wages that we're expecting to experience over this period of economic weakness, because of that low wages growth now, we're expected to have lower wages even 10 years later relative to where they would have been, which means lower income tax receipts for the Commonwealth. Now, that could be a controversial assumption. The PBO appears to have adopted the RBA's projections of real GDP, of what happens to the economy, of how the economy comes out of this COVID crisis. And according to these projections, which you'll see here, real GDP scenarios, it takes the economy many years to get back to its pre-pandemic potential growth, so its pre-pandemic trend growth path. So there's a really long legacy of the impacts of this corona crisis. That could be controversial. Hopefully we will recover a lot more quickly than that, but at this stage it's difficult to tell. So just bear that in mind. Okay, I'll put a link to those projections by the PBO in the show notes, so be sure to check those out. Those figures were for the Commonwealth government. We know that the state government here in Queensland, it's also facing a big build-up of debt as a result of the corona crisis. I've seen estimates from ANZ Research. They're estimating that the budget deficits of the Queensland government over the next 2 years will blow out by about $8 billion, which means that total debt will get to $100 billion. We won't learn the full extent of the damage, or we won't learn the Treasury's estimates of the impacts of the corona crisis on the state budget and state debt until the Treasurer Cameron Dick releases the budget update in September. So we have to wait for that. But we know that things are not going to be that great. And one of the things that they've had to deal with, this will be my final chart, so I'll switch back to my slides. We know that the coal price, so this is the coking coal price. Well, it's a futures price, which is an indication of what coking coal is selling for. If we look at the first position, so that's the 1 month ahead futures price, that's well down on where it's been at the start of the year. And particularly where it was at the beginning of the financial year. And so I expect that will have, that will impact the budget. That looks like it's lower than what the Treasury would have been expecting, and that will, cost the Queensland Treasury additional lost revenue. That they will lose revenue because of those lower coal prices, and they've got their own stimulus measures. So we'll need to wait and see what the total impact on the Queensland budget is in September. Okay, I hope you found that update useful. And yes, I'll try to keep you up to date with new data as they come out and shed more light on how the economy is tracking during this very strange and challenging time. Thank you.